Ladies and gentlemen, welcome back to the channel. AMC Stock is up about 1/3% today. In the beginning of the trading day, you did see a larger rally. You hit $4.81 per share. You have since come down a little bit as the broader markets have. We're going to go over here in this video what's happening today in the broad markets and with AMC specifically. Give you a run through of what all of the data looks like to start this week. Hit the like button as well as subscribe to the channel. First things first, you are seeing a pretty solid day across the board. It's definitely a day for more of your risk on kind of assets. If we take a look at the broader indexes, the Russell 2000 is up 1.45%. The S&P is up about 1/3 of 1%. The NASDAQ is up 1/2 of 1%. So the Russell 2000 is outperforming about 3x what even the NASDAQ is. So why this is happening? Well, couple different things to point out. 10-year Treasury yields down about 5 basis points today. That is a little bit of good news, but beyond that, it's probably more of this secular rotation from, maybe money market funds, maybe some of your NASDAQ names, putting money into Russell 2000, especially as we get into earnings season. Now, earnings season is going to be an interesting one because there is very high expectations across the board that we are going to see some pretty good earnings, at least for the S&P and the NASDAQ. The Russell 2000, your expectations are not as high. So just looking at this arbitrarily, it might be a good place to be in the Russell 2000 other than, your NASDAQ. The expectations are a little bit lower, at least in the Russell 2000. So you are seeing a bit of a rotation. We're getting further into the month of January. So you might start to actually see some of your tax loss harvesters coming back into the markets. I would not be surprised if that is what is starting to happen today as well. And if that is the case, that could spark a larger rally, because what happened was a lot of your stocks that did do well the last 60 days or so of 2023, a lot of those stocks were tax loss harvested and started to perform poorly in the start of 2024. Really, the Santa Claus rally and the start of 2024 itself were not great periods for your Russell 2000, your small cap names. So that is definitely something I think could be starting to have an impact on our markets. And if there's anything that makes sense, right? Consensus is we're probably not going into recession. Consensus is we're going to get 5 rate cuts, maybe more, from the Fed. Then small cap stocks would be theoretically the place to be in that Goldilocks-like scenario. Now, if we take a look at March 20th, good news is we're no longer pricing in a rate cut with an even higher probability today. And the odds are 59.4% of a continued pause through March and 40.2% chance of a rate cut in March. Now, why I say this is good news, some of you guys might say, we're pricing in less rate cuts and we're no longer pricing in a rate cut for March. Why is that good news? Well, it's good news for a couple different reasons. It's good news because if we're no longer pricing in a rate cut for March, that means expectations for the economy are that the economy is probably going to be doing okay through March. That's number one. Markets are always going to be more fearful about a recession, right? Recession is your number one enemy for stocks. That is the difference between what could be a minor correction in 2024 or a full-blown crash. Right? Full-blown crash, not exactly what you want to be dealing with, right? Pretty simple. And if that's the case, if we're heading into recession, well, you should probably get out of markets now. So that's the one side of this. The other side of this is if we were still pricing in 7 or 8 rate cuts heading into the next Fed meeting, which is next week, January 31st, again, the week of big tech earnings, Apple, Microsoft, Google, Amazon, so on and so forth, then you would get a lot more aggressive, hawkish language from Powell. And at this point, markets for the end of the year are pricing in, let's see, they change every day. So 1, 2, 3, 4, 5, 6. You're still pricing in 6 rate cuts. That's actually up from Friday. You were only pricing in 5 rate cuts, but you're pricing in 6 rate cuts for 2024. So kind of just pricing those out down the line, but you're borderline between 5 and 6 rate cuts. So yeah, you're still pricing in quite a few rate cuts, but the longer we push those out, the less hawkish Fed Jerome Powell is going to have to be coming on January 31st. So in the near term, actually not pricing in a rate cut for March is really good news. Really good news. Now, 2-year Treasury yields also falling about 3.5 basis points. Taking a look at the 10 and 2-year yield curve inversion, you are staying pretty much flat today. I believe you will uninvert about, a 1 point or so. You'll be inverted about 0.23% if we did hold true to what's happening in the bond market here by the end of the day today. Now, as far as earnings, you will have United, Logitech, AGNC, Agilys, Brown & Brown Insurance, Zions Bancorp, Great Southern Bank, Cross First Bank, Independent Financial, and Enterprise Financial that will report earnings today and after hours. Tomorrow is where things really start to kick off with Verizon, 3M, GE, RTX, Johnson & Johnson, Halliburton, Lockheed Martin, PG&E, DR Horton, and Packer that report earnings tomorrow pre-market, and then Netflix, Intuitive Surgical, Texas Instruments, and a bunch more companies will report in after hours. And then throughout this week, you're going to have some big earnings like Tesla, Wednesday after hours, ServiceNow, Las Vegas Sands, IBM, and then Thursday you're going to have American Airlines, Alaska Airlines, Southwest Airlines, and then after hours Intel, Visa, and Capital One that will be reporting earnings. So definitely going to have some large companies here this week that will be important. Now, taking a look at the stock O tracker data, we can see not a whole lot of option activity, not nearly to the same extent that we had last week, but still a sizable amount. You do have about 19,000 calls currently in the money, 40,000 calls out the money, 14,000 puts in the money, and 29,000 puts that are out of the money. So if we do continue to see AMC doing relatively well, if you continue to get that upside momentum, then you might get more people buying, trades into AMC stock. Now, if we take a look here at the stock twits sentiment gauges, give this a bit of a second to refresh. We can see the sentiment is bullish at 71 and the message volume is high at 56. So this is exactly what you want to see if you are a bull in AMC. You want to see the participation ratio also start to increase. That would just mean more people in general talking about AMC. This is at 43. It's higher than where it has been recently, but you want to see that get to normal, high, and then inevitably extremely high. That's when you're probably going to see a larger rally. At least if that were to happen, then I would be very bullish on a continued kind of upside move in AMC stock. It does not appear as if we have any company specific news on AMC stock today, so we will go into the Ortex data. And first things first, option activity from broad retail investors, 71.7% to the call side, 28.3% to the put side. Interesting flow sentiment has 3 orders totaling $711,000 with a positive order value of 5%. So, nothing too crazy from hedge funds and institutions today. If you take a look at the Ortex data here and the short interest at 9.46%, I've said it probably 1,000 times here on this channel. I don't believe these numbers are accurate. I believe the numbers are a lot higher. With that being said, we did have that proposed rule change go into effect in November and December. So we should be getting some aggregated short data for AMC. We should know who's short, how long they've been short, cost to borrow fees, collateral, all kinds of different information at some point here. But I think with that being said, if the short interest is really 200% plus like I think it is, you'll probably start to see the short interest climbing here as some of those short positions that maybe were being covered up via options start to leak through, kind of like a glass that you just keep filling. Eventually it starts to spill over, right? I think that spillover could lead to higher percentages that are sold short that start to get picked up here on Ortex. You do have $107 million worth of short positions, 1.24 days to cover, 23.69 million shares that are currently sold short, 19.31 million shares currently out on loan, cost to borrow 1.05%, utilization of 33.42%, and a short score of 56.07 out of 100. So there you have all that. As far as AMC, you are now red on the day today. So far, you're still sitting at $4.50 per share. So the situation could be a lot worse, and you've bounced over the past couple of days. So we'll see what happens by the end of the day today. But still, at the time of recording this video, the RSI is at 29. So you're still under 30. You're still on the oversold side, and your MACD line is, well, starting to try to go positive. So we'll see what ultimately does happen. Hit the like button as well as subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.